Hello, I'm Jay Bryson, Chief Economist of Wells Fargo Corporate and Investment Banking, and I'm joined today by my colleague, Senior Economist Charlie Dougherty, to talk about our economic outlook. But Charlie, before we get to the economic outlook, can you kind of level set for us, kind of tell us, how the economy's doing right now here in January 2025?
Yeah, thanks, Jay. So the U.S. economy is starting 2025 with plenty of momentum. So we don't have all the data yet for Q4, but we're tracking real GDP growth to be between 2.5% and 3%, both for the fourth quarter and for 2024 as a whole. So just to provide some context there, if you go back to the prior expansion before the pandemic, growth right now is running at a rate that's actually a little bit stronger during that time. So what's driving growth? Well, we're still seeing strength in the consumer sector, with the labor market a big support factor, right? So December's employment report was all around positive. Employers added a little over 250,000 net new jobs during the month, and that actually helped push down the unemployment rate slightly. So the labor market has cooled off a little bit, but it's been resilient, and it's supporting consumer spending and supporting the overall economic expansion. So that's not to say there aren't a few soft spots out there, right? So if you looked at business investment, that's been pretty weak. So has the real estate market and manufacturing sector. Then in terms of inflation, there's been a lot of progress in getting inflation down over the past few years, but it's stalled out a little bit above the Fed's 2% target. So if you looked at the annual rate of the Fed's favorite core PCE deflator, it's running a few ticks below 3%, which is again a little north of the 2% target. So Jay, that's the setup. How's the outlook for 2025 and 2026 shaping up?
Yeah, right. So Charlie, any economic forecast is based on a set of underlying assumptions. And one of the, key assumptions that we're making for the future is that you'll see some sort of tariff increases this year. Now, President Trump, when he was a candidate, ran on the promise of a 10% universal tariff applied to all of America's trading partners, with 60% on China. Now, will that come to pass or not? We really don't know, right? But what we are assuming is we think there's going to be some sort of tariff increases. Maybe not what President Trump talked about on the campaign trail, but there'll probably be some sort of tariff increases. And what that does is it raises prices. And as prices go up, what happens is real income or purchasing power by consumers takes a hit. And therefore they have less money to spend on other sorts of goods and services. So essentially what happens is growth in consumer spending slows down as well, as does growth in overall GDP. And so if you look at the second half of the year, we've got a slowdown going on in the US economy as these tariffs take effect. Now, as you look into 2026, though, we do have some economic acceleration going on. And what that is based on is our expectation that by that time, the regulatory environment should not be as tight as it is right now. That should help to spur business fixed investment spending. And we also think you might see some modest tax cuts starting in 2026. Now, this probably won't be like what we saw back in 2017. What we're using is a placeholder of roughly $1 trillion spread out over the course of 10 years. But as those tax cuts take effect starting in 2026, that should spur consumer spending somewhat, and that's what leads to a pickup in growth in 2026. So in sum, we think that the tariff story is more of a 2025 story, leading to some slower growth in 2025. And then as you look into 2026, that becomes more of a deregulatory tax cut sort of scenario, which leads to stronger economic growth. So based on that, Charlie, what do we think the Fed's going to be doing going forward? Have we made any changes to our Fed outlook this year and next year?
Yeah, so we have made a minor adjustment to our Fed funds call. We now expect the Fed to cut just 2 times in 2025, and for them to essentially be on hold in the first half of the year. So again, if you take a step back, the economy is growing at a strong rate, the labor market is holding its own, and inflation continues to run at a warm pace. So the Fed can afford to be patient here as it digests the 100 basis points of cuts they've already implemented since September. So it's interesting, if you go back to the December FOMC meeting, they released their latest summary of economic projections and included the latest dot plot. And in that dot plot, it basically said that most Fed officials now expect just 2 rate cuts to be appropriate this year. So our monetary policy outlook is actually well aligned with the Federal Reserve's own projections. So Jay, we have a lot of moving pieces here. How do you evaluate the risks moving forward?
Yeah, that's a good question, Charlie. And all economic forecasts, there's always the risks that surround them. Some of them you just, you tend to assume away until if they do happen, like things like, say a pandemic or wars or stuff like that. The probabilities of those things happening are relatively low. I would say the biggest risk to our forecast is one of that assumption that I talked about at the very, very beginning, and that is with tariffs. If tariffs don't take effect this year, if the president is just using it as a negotiating tool and holds off on putting tariffs on, then we're probably looking at a stronger economic outlook for 2025. Conversely, a big downside risk to that is our trading partners retaliating versus us and putting their tariffs on American exports. That could lead to even slower growth going forward. So right now, when I think about the risks to the forecast, I really think are centered around some of these economic policy choices that the Trump administration will make in coming months. And as we learn more about those policy choices and as that affects our outlook, we may be making some changes to our forecast, and obviously we'll be keeping people up to date on our latest thinking. So Charlie, as you mentioned before, there's a lot of moving pieces here in terms of economic policy choices of the incoming Trump administration. And as we learn what those policy choices are, we may be making changes to our forecast. And obviously we'll keep people abreast of those. So Charlie, thank you for joining me today to talk about our economic outlook.